Well, a very good evening, everyone, and thank you all so much for joining us on another landlord information or any real estate landlord information session. Tonight is another one in our event series where we'll be talking with Chris Lewis, who we'll introduce in a moment, all things banking and finance, and what that means for you as our landlords, and how you can best sort of get the best sort of deal at the moment that's around, and really look at over the course of the next couple of weeks and months, if you're wanting to sort of refinance Bank of Melbourne, and what you should be looking for on your current sort of rate. So we'll introduce Chris in a moment, but as always, Q&A is always open on the top right-hand corner of the screen, so please feel free to send through any questions you have. I'm sure that tonight's information session will have a lot of questions being asked, as we've already received a few over the course of the last week, but when the emails went out. So we'll be addressing those questions, but if you have any questions, please feel free to send those through. Michael, how are you going? Have you got us? Are you on mute? I think you're on mute. Just unmute yourself.
Sorry. Yep, that might be better. I was just saying you're not in your usual location tonight. You look like you're somewhere different.
I'm in the office tonight, and we would have thought after being 7 months doing these sessions, you'd be able to know how to unmute yourself when you come up on screen for the first time.
Yeah, thanks for that. Yeah, no, look, yeah. So Anthony's there in the. I'm going to quickly change the topic. Anthony's there coming to us from the boardroom tonight, which is good. So we've been hanging out to do a presentation from there for a while now. So this is the first of hopefully many. And for those of you that are joining us from interstate and overseas, obviously coronavirus restrictions are starting to ease a little bit here in Melbourne, which is nice. So hopefully maybe even by next month, you might even see both of us sitting in the same room together, which will be odd for even for us, I think. But no, looking forward to it.
That would be strange to have the two of us sitting in an office together. I don't think that's I don't think we've even been in the same room for the last sort of 3 or 4 months. It'd be nice to be able to sit next to each other and do one of these. We've never done one like that, so that'll be interesting to do. But I think Michael, we'll introduce Chris. Chris he works for Bank of Melbourne, and has over a 20-year career in banking and finance, coming from the private sector into banking, and has helped countless Australians realise their goal of home ownership and so forth. So there was probably no better person to get on and pick their brain over finance and loans and those sorts of things. So Chris, thank you for accepting the invitation on coming on this session.
Michael, Anthony, thank you both for inviting me.
No, thank you. And I think we'll just sort of get right into it. Over the last sort of little bit, and even as early as yesterday, there's been some changes to lending. So how's the market been over the sort of last 12 months and even probably the last 24 hours?
Yeah, really good question. It's quite a timely discussion, because I don't know whether Michael and Anthony, whether you looked at the calendar to schedule this one in and thought you'd leave it 24 hours after a rate cut, but certainly rates are now at historically low levels. They're at 0.1, so the Reserve Bank yesterday cut the cash rate from 0.25 down to 0.1, and they've pretty much announced that's as far as it will go. So they won't entertain negative rates, but what they'll do is they'll set the cash rate at 0.1, and they've got a whole lot of quantitative easing that they'll employ to keep the rates and the money going through the economy.
Yeah, no, that's great. And because of what's been happening in the economy recently, I know there was a little bit in the budget that came out around making access to money a little bit easier. Obviously, the government's throwing a bit of money around at the moment as well. Is it easier? Because I know we went through a bit of a period there for about 12 months or so ago now, where lending became a lot more challenging. So I know there was problems around serviceability requirements and some of those things there. So is it, I suppose, simplistically, is it easier to get money today than what it was, say, 12 months ago? And will it get easier over the course of the next kind of 12 months as we kind of work our way out of this recession?
Yeah, look, it's a really great question, and look, the shorter answer of that is yes. So the government made some recent announcements that they're going to pare back what's called responsible lending guidelines. So basically, the banks were having to go through quite a lot of hoops, so to speak. Also, we're putting the customer to go through a lot of hoops, jump through a lot of hoops to prove that they could service a loan. And they're starting to pare back some of these restrictions and making it a lot easier to borrow. So I expect over the next 12 months that because credit is going to be easier to obtain, that we might see prices trending back up again as we emerge from the coronavirus. So just a couple of things in terms of, and these were announced only yesterday. So Westpac Group, of which Bank of Melbourne's a part of, they've already implemented the new tax rates. So in the last budget, there was a number of tax cuts that were announced and will be put in retrospectively from July 1st this year. So we've already got those in our servicing calculators. So what that means is when you sit down with a banker, they'll have the ability to input these new tax rates, and it means that you can borrow more money.
Great. And just on that, just on serviceability, one of the things that often comes up is, we have it with quite a few, people that are looking at purchasing, say, a second or third property, coming to us and saying, look, I've got more than enough equity because I've paid down a bit of debt, or the market's been favourable, and and the value of the investment's increased by X amount. So equity's fine, but serviceability is an issue. Are they the two things that the bank really looks at when they're looking at approval, or any bank really looks at when they're looking at approving finance for somebody?
Yeah, exactly. So, you're exactly hit the nail on the head. There's two components that a bank looks at. One is equity, and we've seen obviously with over the last decade as prices have increased. Even if you've had your lending at interest only, as prices increase, the equity that you have in a property is going to increase. So for most investors in property, equity is not an issue. What might be an issue, and as you mentioned, as some of your customers go for the second or third loan, is that the bank has been historically saying, "Oh no, you can't service a debt," even though that you've got the equity behind you. So yeah, as I said, these a lot of changes now running through should make it easier for people to borrow more. As well as the tax cuts that'll come through. Another one is called the changes to the HEM, and I know I don't want to be too dry, but basically HEM is basically a generic figure that the average Australian needs to live on. So they'll say, the bank will adopt a HEM based on your living circumstances. So if you've got 2 adults and no dependents, your HEM will be X. If you've got 2 dependents, it'll be Y. So forth and so forth, depending on the household. Now, some of the changes that came through over the last 2 years, 3 years, really scrutinised your living expenses. They'll get to the stage where you were sitting down to get a loan, and people were saying, the banker was saying, well, you got Uber Eats 3 times last week. That's going to affect your ability to lend. And it was getting quite crazy, where every pretty much line item was being put under scrutiny. And that wasn't because the banks wanted to give customers a hard time, but it was because APRA and the regulators were making sure we're putting the pressure on to make sure we captured fully what borrowers were spending their money on. There was a case about 6 months ago that ASIC took Westpac to court, and the judge basically sided with Westpac and said, just because your spending today is, every night you're having a bottle of the finest red wine and a Wagyu steak tonight, doesn't mean if you take out a new loan tomorrow, you'll continue that spending habit. So obviously, and as we all know, when we take on new commitments, we pare back some of our existing spending, and that's just common sense. But until that decision kind of worked its way through, there was a lot of scrutiny on previous expenses, and now it's been relaxed.
Yeah, no, that's good news. That's really good news. I suppose now just more, getting more technical and how things kind of work. But how often would you suggest reviewing your loan, whether it's reviewing the rate or reviewing the bank that you're with? How often would you suggest suggest doing that.
Yeah, look, one of the things that's been really noticeable in the lending market in the last 12 months is the refinances. So obviously, Corona in particular, it has really impacted the ability of people to buy new properties. We've seen that, right? Obviously, we can't have auctions, we can't have open for inspections. So the banks, being the companies they needed to look to refinancing new customers in order to build their profitability. And so what we've seen, and this is across the big four banks, is over the last 12 months, is they've been having what these called cashbacks. So at the moment, Bank of Melbourne has a cashback whereby if you refinance your lending to us and you meet certain criteria, you'll be entitled to a $4,000 cashback on a new loan. And it potentially can even be more lucrative for investors because we then pay a subsequent $2,000 for every second property or second, third, fourth property. So if you had 4 properties, for example, you could be up for anything up to a $10,000 cashback that's paid post settlement, which is incredible. In my 20 years of lending, there's never been cashbacks, but let alone some of the sizes that some of us banks are paying in order to win new business.
Yeah, that's enormous. So I know there was a little bit of speak a while ago, and I know that there was some barriers to people being able to move loans from bank to bank with early exit fees and those sorts of things. Is that designed to stop that, or is a lot of those early exit fees kind of been removed from the market as well?
Yeah, the early exit fees have pretty much, certainly among the bigger banks, haven't been really a factor over the last probably 5 or 6 years. There is some nominal settlement fees and some government registration fees that you need to pay. So obviously, when you switch banks, you need to discharge the mortgage from Bank A and then put the new mortgage on, register the new mortgage on the title. So there's some government fees that are normally a couple of $100. You might get settlement fees of a couple of $100. But the actual process, and it'll depend on bank to bank, but it shouldn't be any more than $400 or $500, depending on the amount of properties that you have and how it's structured.
Yeah, that's great. So there's some pretty, like you said, there's some pretty big financial incentives now to be able to switch. I mean, if you're getting $4,000 for the first one and then $2,000 for every subsequent, like you said, it adds up pretty quickly. That's it becomes pretty attractive, doesn't it?
Yeah, it's really attractive. And look, I mean, as I said, this is something that's kind of emerged in the last 12 months. I don't know how long it'll continue like this. Obviously, I think the property market's going to pick up nicely in 2021. By how much, who knows? So once everything starts returning back to normal, then there'll be less incentive to pay these cashbacks. But certainly right now, it's something you've got to have a look at and do the sums and see what you can and see whether it's right for you.
No, that's great. And we were just actually having a bit of a chat just before this began around obviously the rate cut last night or yesterday, and the bank starting, or some information starting to filter through from the banks. I know some of them had started to make some announcements on moving fixed rates. So more of probably a 2-part question. One, didn't seem like there was much movement on variable, but what were Bank of Melbourne offering since the cut yesterday?
Yeah.
And then onto fixed rates as well. What is is it worthwhile considering fixing a rate given that we're at such a low rate at the moment, and the Reserve Bank obviously saying that there's no intention of then going any lower than where they're at the moment. Is now the right time to fix your rate?
It's a really, really good question. So in terms of the RBA decision yesterday, so there's been no announcement yet from the Westpac Group about whether they'll pass on the 0.15 to all mortgage holders. So I'd imagine we'll see more or announcement on that in days to come. But what we have seen already, so last Friday, so we have different types of home loans, and you mentioned fixed loans, and I'll get to those. But we have what we call a basic product, like a no frills, no fees home loan and investment home loan product. And last Friday, we already reduced those rates before the announcement. So I actually put these here so I could bring them up quite quickly. So in terms of for investment properties. So just remember that the lending against your principal place of residence is different from what interest rate will be for an investment property. I think that the basic product on a P&I basis is about 2.99 for the basic product for an investment home loan. For a home loan for your principal place of residence, I think it's down to about 2.59, and that's on our basic product. And then, as you said, the fixed rates, they have already started to come down. We haven't had any we haven't had any announcement yet on the investment fixed rates. So the 2-year investment fixed rates is about 2.64 at the moment with Bank of Melbourne. And if you have a chat to the bank, and they may even be able to squeeze a few more points off that for you. But one of the most exciting things, or not exciting, but one of the things that I've never seen before was today the Bank of Melbourne launched a 1.99% fixed rate for 4 years on your principal place of residence. So look, I'll leave the discussion about whether you want to fix it 4 years to one side, but the fact is that interest rates are available at banks now with a 1 in front of it, which I think all of us would never have imagined was ever possible.
Yeah, that's unbelievable, isn't it? It's a very, when you like you said, when you're talking something with a 1 in front of it, it's pretty shocking to see that. And again, we were just having a bit of a discussion earlier about loan rates that were 7+% not that long ago, and to be down at 1.99% for 4 years, that's it's extremely low. Anthony, I think there was a question that came through the Q&A around fixing rates as well. Did you want to just go through that one?
Yeah, well, thank you.
Okay.
And I think you might just sort of covered off on it, but it was more so around commercial. So if a landlord has a commercial property, and I don't want to sort of get into specifics, but does Bank of Melbourne sort of offer 3 and 5 year fixed sort of terms, fixed interest rates on commercial properties as well?
Yeah, look, I'm not across commercial lending, so I can't answer that one, Anthony. But
That's all right.
but they did announce in this email we got all staff this afternoon. There is a reduction in some lending for small business or small to medium enterprises. So it could be included in that, definitely. But I'm not in a position to be able to comment on it.
I guess one of those ones is probably asked to reach out to someone from Bank of Melbourne after this, or reach out to us, and then we can probably point them in the right direction to probably speak to a commercial, someone that specialises in the commercial side of things more so than on the home loan side. The question I also had was, should landlords look to as a mortgage holiday that have been sort of affected through the COVID pandemic?
Yeah, look, it's a really good question. So obviously that's one of the things that we saw when the COVID first was an outbreak. All the banks got together, and obviously for those that were affected, they had the option to have a mortgage holiday. So initially it was 3 months, and then it was extended out for those that required it to a further 6 months. And now I think, depending obviously geographically, we've been much more adversely affected here in Victoria than other jurisdictions. So it comes to a case-by-case basis. In saying that, if you're in a position where you've been impacted by COVID, and whether it's because your tenants haven't been able to pay their monthly rent, or that you've got a vacant property and you're not receiving an income, and you're not able to meet the repayments, or you don't have sufficient cash flow to make that repayment, then obviously I would certainly encourage people to take that mortgage holiday to make sure we don't. The last thing that we want to do, and the last thing that you want to do, is have to liquidate an asset in order to pay down a debt. The bank, that's the worst case scenario for a bank, and so that's why they've come up with these mortgage holidays. And obviously it's going to be a case-by-case basis, but they'll continue to work with customers who are facing financial difficulty to manage it in an effective way. And hopefully, once people are back employed, or you've got tenants back in, or et cetera, then you can start making repayments and go from there. So if you've been impacted and you've got your ability to repay the mortgage each month, then you should certainly take yourself advantage of it. If you haven't, but you might have the cash flow. You might have a vacant property, but you have the cash flow to meet the repayments. It's probably a discussion you probably want to have with your accountant about what you do with that asset, because it's going to affect if you're not receiving an income, but you're still paying interest, and obviously there's some gearing implications for it. So you want to work out the sums there on that front. And also at the end of the day, when it comes to if you're just meeting the interest repayments, the longer you just meet the interest repayments, the more interest you'll pay over the life of the loan. So depending on the type of investment property, whether you want to pay down the debt and have an asset in retirement that's going to generate you an income and has no debt, if that's your strategy, or whether you just want to or whether it's for tax purposes. So maybe have a chat to your accountant and get their advice about what's best for you.
Yeah, and I think on that as well, as then again that leads into what we've sort of been talking about, and when you can refinance, and there's the benefits of that refinancing with Bank of Melbourne. To reach out to us, and again we can put you in touch with the people there that can maybe help you out with sort of lowering those interest rates where they are so good. Because I know even from personal experience, when having an investment loan and not really looking at it, and then just by the off chance seeing that it was at 1.5% higher than what I could get elsewhere, just in that alone there's savings there to be had, and especially with some of our landlords that have taken rental reductions. That's another way to sort of subsidising that and getting a little bit back on that side. Another one, from one thing, and this question I get a lot, and I try to explain it to not only to clients but to friends and family. How do offset accounts work? And what are the benefits of them?
Yeah, it's a great question, Anthony. So it's a question I get the most as well, I think, as a banker over the years. First of all, offset accounts are quite rare globally. From my understanding, Australians are about the only ones that get to enjoy offset accounts. And they really are God's gift to investors, basically, because it gives you full flexibility. And I don't want to get too much into tax advice, and because I'll leave that to the professionals. But effectively, an offset account works. It's a separate account, and the balance of that account offsets the interest that you pay on a loan. So, for example, if you have a loan that's $400,000, obviously each month the interest is calculated on the balance of that loan, which is $400,000, and then the account's charged that. If you have an offset account and you say, for example, I have $100,000 sitting in that offset account, it offsets the potential interest that's going to be charged on that loan. So even though there's still $400,000 in that loan, they'll subtract whatever the balance of the offset account is and just charge interest on the difference. So in this case, they'll just charge interest on $300,000, and away you go. So that's the beauty of offset account. If it is an offset account against your residential home, it's even kind of better, because you can basically get your pay dumped into it each fortnight, each month. You can run all your expenses through your credit card, build up that balance in your offset account, and then pay the credit card each month. But in the meantime, you've offset the interest on the home loan by that amount of your credit card each month.
Yeah,
hope that makes sense.
Yeah. No, it's probably a lot better than how I explained it. And I think that and the other thing too is that you pay, so your repayments don't change, but you're just paying more of the principal off over that every time you've got money sitting in that offset account. Is that sort of how it would work?
Exactly, Anthony. So you are potentially paying down the principal more quickly. And the other benefit is obviously from a tax point of view, if your gearing benefits can be impacted if you put money into that loan. So, for example, if you put $100,000 into the loan and had the balance at $300,000, and then took the $100,000 out later on, if that $100,000 was taken out and wasn't for improvements to the investment property, then the tax implications might be that you can't claim the gearing on that additional amount. So, using offset accounts really is really a godsend to not only the investor but also the accountant. And you just really need to make sure that you don't want to mess with the principal component of an investment loan, because at the end of the day, it could impact your gearing quite significantly.
Yeah. And another one, this is one that I sort of get asked as the bit from buyers. Should they borrow 100%? And I guess on extension of that, can they borrow 100% when buying an investment property?
Yeah, great question. And look, the short answer again is yes. So, because, lending against your principal place of residence is not tax deductible, lending against your investment property is tax deductible. So if you've got the ability to do it, if you've built up sufficient equity in your home, and you can use that equity to use to support the purchase of the investment property, plus any stamp duties and costs associated with the transaction, then you'd want to look into it and you want to make sure you do it. As a banker, I would certainly recommend that customers set up their investment lending that way, by using the equity in your existing home. And once again, if that suits the customer, suits the borrower, then that's the way we proceed. Definitely.
Yep. Yeah, perfect. There's a question that just came before with just on the offset account. The question is, can an offset account be used against a fixed loan?
No, not. It's a little bit complicated. You can, I think, with with Bank of Melbourne, my understanding is you can, for example, but you don't offset the interest. What you do is you get paid interest on the amount. So whatever the kind of daily rate of interest is on a normal savings account, which is much less than what the interest you'll be paying on a home loan. So it's a bit tricky, but it's certainly, you wouldn't recommend doing it.
Yeah. And just on that, you mentioned, we were speaking earlier about you can do a mixture of fixed and variable on loans as well. Is that right? So it doesn't have to be 100% fixed. You can do half fixed, half variable, and then kind of then offset. I'm assuming that's the way it would work. You'd then be able to offset that, not the variable portion. Yeah,
exactly. So say, for example, if you were thinking about fixing for 2 years at the moment, and we said that the rate's at 2.64 at the moment, and you said, okay, well, over the next 2 years, there might be an option for me to pay down about 50,000 in capital. So what you might do is that 400,000 loan, you might have 350,000 fixed, and you might leave 50,000 variable, or whatever permutation or combination that you want, based on your personal circumstances, and that way you get the best of both worlds. You lock in a good rate that that you're happy with, and then you leave yourself the flexibility of being able to offset it.
Yeah, well, that's great. That's great. Anthony, did you have any more questions of Chris at all?
No, I'm right. I'm just trying to think of anything else that I had written down. No, that was it from me. Yeah.
No, I think that certainly raised a few questions in my own head, and certainly made me, as I'm sitting here, I've noted down quite a few things, saying I've got to check the investment loan, got to check the home loan, got to check all those rates, and it's been really good, Chris. Thank you so much for that, because it's not hearing all of those things and hearing all those things. I suppose it's not something that often come to mind, and unfortunately, I suppose home loans and investment loans are one of those things that often become a bit of a set and forget sort of thing. And you accept the rate cut, you might have a bit of a complaint every time there's a rate announcement, and your bank might not pass on the full cut, and go, maybe I should do something about it. But it's I suppose not that often that you actually sit down and go, it's now's an opportunity to do it. And certainly the incentives that Bank of Melbourne are offering at the moment, with that $4,000 bonus and the extra $2,000, it becomes pretty attractive, and certainly worth the while spending the time and doing that. So I really appreciate going through all of that, Chris, tonight. That was really good.
Yeah. So I was just going to say, Michael, just in summing up, I was going to say, look, for me personally, I think it's really prudent to, when you do your tax every year, also get your home loan reviewed. That's the kind of trigger. I mean, you've got all your paperwork in front of you when you're doing your tax, or you're compiling it for the accountant. Just call your current bank and say, what are the rates? What's the best thing you could do? Just let them know you're going to shop around. Just give them that information, and let them come back to you if they can squeeze out a few points for you, and then go from there. But what we say historically, what happens is banks are they'll give you a great rate at the time, but like all utilities, whether it be your gas, your electricity, your phone, your internet, whatever else. Obviously, new specials come in all the time to try and attract new customers, and you should be putting your hand up and saying, look, I want that too. And if there's a better deal out in the market, whether it be Bank of Melbourne or otherwise, then you should certainly do the sums and jump on it.
Yeah,
Chris, just one quick question I had just on that. How hard or how easy is it to change from one bank to another?
Yeah, so it's not that difficult at all anymore. I would say. So basically, we have a digital mortgage process basically. So you'll have a conversation with a lender, they'll get a few bits and pieces of detail about it. They'll send you a link, and while you're watching telly at night, you can actually fill out the application form, which is pretty simple. It's just follow your nose kind of stuff, and send it back. And the banker will assess it. They might have a few questions they need to run past you, and then once the application's done, it moves pretty swiftly. Everything's been digitized these days. In the old days, you had to go to the land titles office and you had to hand over checks and you had to hand over the actual physical title and all this stuff. Now it's all done electronically. So in some cases, we pay the bank in advance, what's called a faster refinance, before even sometimes the paperwork's been done. So it's not a cumbersome process at all. We've made it as user friendly and as easy as you can. So yeah.
That's brilliant. That's brilliant. No, well, like I said, thanks again, Chris. I really appreciate your time tonight. I certainly got a lot of value out of everything that we went through, and I'm sure a lot of our clients will. And just as we mentioned earlier, and we'll send out some details with the recording as well. If you are looking at taking some action after what we've spoken about tonight, we've obviously can pass your details onto the Bank of Melbourne. We've just set up a scheme recently between ourselves and the bank that allows us to pass those details on. So a couple of quick questions that we need to ask, and then we can pass the details on and get you in touch with the bank and hopefully get access to some of those benefits. Like I said, I'm sitting here going, Jesus, it's definitely worthwhile. Definitely spending your time and doing it.
It's crazy, and look, I mean, the thing of it, if you're getting $6,000 to refinance, I mean, that's going to get you a nice little holiday. Can't get you to Tahiti these days, but it might get you to Byron Bay with the borders being opened up in 2 weeks' time. So let's make the most of it and have a great summer.
No, that's right. Exactly. No, I appreciate it again, Chris. Thank you for that. Anthony and I are just going to jump in and do a bit of a state of the market for 15 minutes. If you wanted to stay with us, or feel free to jump out if need be. But look, we're just going to quickly run through where things are at on the rental and sales side as well. So obviously there's been a few things happening over the course of the last month or so since we last caught up. Obviously the ability to be able to go out and do private inspections was given back to us about a month and a bit ago now. I think it came up on 5 weeks. And we've seen quite a lot of activity in that 5 weeks. It's been pretty mad, to be honest. There's been a lot of things happening. Big shout out actually just to our leasing and property management team. Huge effort by them through stage 4 and then also coming out of stage 4. We went through the numbers for October this morning, and we have done 39 properties leased, with another 22 booked in for November. So huge start to end of restrictions and doing inspections. That's enormous. I think our record's 50 for the month, and that was during normal operating conditions, being able to do open for inspections and just completely normal operating conditions. So to be able to put 39 together in the first 4 weeks of coming out of lockdown with another 20 to come, that's huge. So big thank you to the whole team for that. The market as a whole has been, like I said, it's picking up, but in terms of pricing and things in the city, unfortunately, they've remained pretty flat. We've seen kind of the 1 bedrooms in the CBD going for around the 3 to 320. Some of them even lower, depending on which buildings they're in and what location they are. The 2 bedrooms are around that kind of 4 to 450 mark. So we're seeing it come off between $100 to $150 a week on 1 and 2 bedrooms. So it is pretty significant. We're talking 20 to 25% reductions in rent. But obviously there's a whole range of factors which we've been speaking about throughout the whole year, but obviously fully understanding what they are and the impact of those is now. But you've had I suppose the whole list of them going from the removal of overseas migration, so all of the student market's been evaporated. And I've actually found throughout the course of the year, a lot of them have left and have kind of given intention that they're probably not coming back because a lot of the courses have gone online. All tourism, which was being absorbed, and it had absorbed a bit of that short-term and Airbnb type rental, that just hasn't happened in Melbourne, particularly because of the second lockdown. That's completely banned it, but it's still, I still think the restrictions are that we can't even stay for, accommodation or recreational accommodation. I don't think we're actually allowed to do that yet. That might change on Sunday, but at the moment we're not allowed to do that. And obviously we're not getting too many interstate visitors either because we've obviously been through lockdown. So we can't leave and no one's all that keen on coming here because once you're here, you can't leave either. So it has been a little bit challenging, but in saying that, if things are priced correctly, we are seeing movement, which is good. Like I said, I'm extremely proud of what the team's been able to achieve, putting the equivalent of essentially 60 leases together in 4.5, 5 weeks. That's a huge effort. So I'm really proud of what they've been able to do, and I'm quite excited to see what's coming. And I think what we're seeing is that there'll be some more stability in the numbers on the other side of this now too. So we're not receiving the flood of notice to vacates that we're getting previously. We're starting to get more consistent numbers through inspections. We're starting to get more consistent inquiries through. Prices are stabilising. We're not seeing that kind of rapid fall anymore. It seems to be flatlining a little bit now, which is good. And now, looking forward to 2021, hopefully we can actually start to see demand start to tick back up again and interstate borders reopening, hopefully a couple of bubbles created with some overseas countries as well. And we should start to see that demand slowly come back. I don't think it'll be a rapid return, but I think it'll be a gradual return, which will be quite good. So that's the state of the rental market. Whilst I'm talking rentals though, a couple of big news pieces that I did want to share with everybody. One, which is quite a sad one. Unfortunately, we've had a member of the team who has decided to look at another career, something different altogether. So Isabella, earlier this month, has made a decision to move into another career, which is in medical research. Very different to property, but she's got a background in that, and she had been thinking about doing it for a number of years, and kind of came to us in October and said, look, now's the time. And she was offered I suppose an opportunity that she couldn't turn back. So she's taken that, but she's very kindly offered to continue on within real estate until the end of the year. So she's working, she probably shouldn't be, but she's working after hours, even though she's in her new job. She is working after hours, and she is also working on weekends as well, just making sure that we've got a really smooth handover until the end of the year, but also helping out doing inspections and things like that too. So very sad to see Isabella go, but she's still very much a part of the team and still certainly a part of the furniture as well. So she'll be around, and we've made the commitment that we'll be doing a dinner before she finishes up too. So hopefully restrictions ease fast enough that we can make that happen. But some really good news too. So we've also had 2 new members join the team. When we spoke last, Hank had joined the team. So Hank moved into leasing. Hank's now actually moved into property management. And we've also recruited another property manager who will be starting on Monday. So that's Jane. So Jane will be joining. And I think Anthony will probably be having another one of these sessions where we'll actually have an opportunity to introduce a few of the new team members as well. Mm-hmm. And in our leasing team, who are shooting the lights out at the moment, they're doing extremely well. We've had Jordan join us too. So Jordan, like I said, new member of the leasing team. We, again, going through last month's numbers, Jordan's been with us for just on 3 weeks now. And looking at his numbers for the month of October, he's already leased 7. So he's certainly well on his way to proving himself as a leasing consultant. So he's again, taken the role by the horns and just really run with it. He's done extremely well. So so welcome to Jordan, Jane, and also Hank, if we didn't do it last time around. And like I said, it's obviously a little bit sad to see Isabella going, but really exciting to see the team growing and growing pretty quickly as well, which is always nice. Now, Anthony, might jump over to you and do a update on what's been happening in the sales market?
Just on leading on from Jordan, he did walk past me about 15, 20 minutes ago in the boardroom. So, and he's also putting the hours in, which is always good. So, and it is always exciting, to bring on new people into our business. It's sad to see good people go, but for Isabella, pursuing a passion of hers is always exciting. So but look, Michael, sales, and I'm not sure if we mentioned it last time we did this. I don't think we were out of lockdown yet when we did our last landlord information session, but the day that it was announced on the Sunday that we could go back and start doing private inspections again, it was like Christmas Day. I was literally jumping around like a kid again at home, and Steph, my wife, had to just settle me down a little bit. She's like, it's okay, but you've been locked up for 8 or 9 weeks. Just settle down a little bit. But it was pretty exciting to get back into it, and it's been sort of all systems go since. So we've had a really good October. It was a really good rebound out of COVID. We didn't know what to sort of expect. There was a bit of pepped up demand from buyers that were looking to purchase, and we had done a couple of sales during that lockdown, but came out really strongly, and were able to secure a few deals last month, which is great, and also listed some incredible properties that we've launched at the back end of last month, and we'll continue on doing that over the next couple of weeks. So really excited to the end of the year. I don't think there will be a Christmas period, I guess, for us. I think it'll be right the way through, and we're sort of expecting to take our break probably over Easter. So we'll sort of be a bit rare. You'll probably see properties that will list in late December, early January. We'll still be listing properties where notoriously you'd stop listing properties after sort of the 15th of December, if not earlier, and wouldn't list anything probably until probably after the first week of January. But I think this year is unnormal, so why not just run campaigns right the way through, and I think there'll be enough demand to warrant that, and you'll most likely have people that will still be in Victoria, will still be around Melbourne, and have that time to be able to see property and make buy a property or sell property at that time. So yeah, it's a bit of a positive sort of way out in terms of the numbers. Prices still trying to find their place a little bit. We've probably seen the city market come off about sort of 5 to 10% in prices over the last little bit since coming out of lockdown, which was always expected to happen, just with the volume of properties coming onto the market. But we'll sort of hopefully start seeing those either settle or hit a line fairly shortly. But yeah, look, there's plenty of activity sort of out and about, which is good.
Yeah, no, that's great. That's good. And just in terms of what's coming to market, you mentioned that there's a few obviously coming in towards the end of the year. So just in terms of listing, whether to hold off until 2021 or keep going right through, it sounds as though it's going to keep pushing through. That spring selling season's kind of not happened this year because obviously we've been in lockdown. But is it just mean that the timelines have been pushed out and it's just work right through?
Work right through, and something, and I know this is going to sound extremely cliche for a real estate agent to say, but there's probably no better time to sell than now, and that's no trend. And it's been like that all year, and that's been my advice to every single person I've spoken to that's had the thought of selling. It's you're waiting for what exactly, waiting for the market to improve, waiting for things to go back to normal. Who would have known? Or if you were to say to us in March, I think we've said this on this before, but if you tell us in March that we would still be coming out of a lockdown in October, and have sort of 6 months of COVID around, we'd all think you were crazy. So for us, it's list now, take advantage of whatever demand's there, and run that right the way through. And whether that's this week, next week, or in December, if you're in a position that you're thinking that yep, I want to sell, then just do it, because you just don't know what's around the corner. We listed a few properties the week of going into stage 4, not knowing we're going into stage 4, and sort of had properties sit there for 2 or 3 months not having much activity on there. Now there is, but for 2 or 3 months there was nothing happening on those properties. So yeah, just list it and see what happens. Yeah. But in terms of some listings coming on, some absolute cracking listings, whether they're 1 bedrooms, 2 bedrooms, and 3 bedrooms. We've just listed a 2-bedroom on Queens Road. 120 square meters internally. It does need renovations done to it, but it's a beautiful apartment and an amazing building. We've listed a 3-bedroom double-story apartment in Carlton North. That's just hit the market on Monday, which will be going to auction. We've got some an amazing 1-bedroom apartments in the CBD. One in particular on Collins Street, 620 Collins Street. Owners have just had the floors done, fresh coat of paint. It's basically move-in ready or investment ready. So any owner that's thinking of refinancing and maybe taking a little bit of equity out to buy another investment property, give me a call.
Jeez, we better cut him there, because otherwise he's going to start calling an auction, I think. So let's let's leave it at that. Thank you everybody for joining tonight, and obviously a big thank you to the guys at Bank of Melbourne for joining us. In particular, Chris, for joining us tonight and giving us that really insightful information that we got. Like I said, certainly got my mind ticking over and thinking about different ways of doing things. And what I'll do is I'll attach some information in the recording email that comes out later tonight. Around how you can take advantage of some of those things as well. But thank you again to the guys at Bank of Melbourne. Thank you, Anthony.
Thanks,
and we'll see you all this time next month. Thanks, everybody.
Thanks. See ya.